Hello viewers. Stephen here and I welcome you to this channel where we talk about investing, business and finance. In today's video, we will be talking about the 12 money goals you must achieve before 40. But before we begin, be sure you have subscribed to this channel and smash that like button on this video to support the channel. Thanks for doing that. Now let's begin. 40 isn't just a number, it's a big milestone, and it also marks the halfway retirement point. 20 more years and you could be traveling the world, living on an exotic island with the sun shining and the beer flowing, or just enjoying life at home. Before you get any older, you should know that there are 12 financial goals you need to achieve before 40. Starting from number 12. Create and use a budget. Do you have a monthly budget or only a hunch about how much you can spend? If you answered the latter, you're not alone. Only 41% of Americans use a personal budget according to one research. And we understand that there are many rules that claim you should have and follow a budget by the time you're in your 40s. If you've never attempted it before, this is as good a moment as any. However, by the age of 40 you should be able to calculate the exact amount of money you have available each month for rent, mortgage, utilities, bills, food, transportation, expenses, leisure and investments. This will serve as the foundation of your financial plan for debt repayment, emergency fund building, and retirement planning. And it's unlikely that you can't do any of the things mentioned previously unless you first figure out how much money you have. Select and put to the test your preferred budgeting method. Budgets, after all, are lenient. You can make errors. They aren't all horrible if you learn from them, reassemble the components and give it another shot. Determine why you're overspending. What are your options for resolving this problem? Do you need to reduce your spending, alter your habits, or perhaps create a side business? You will come to discover that to reach your financial goals before turning 40, a budget is essential. Number 11. Open a Roth IRA. One of my preferred investment vehicles is the Roth IRA. A Roth IRA is a tax-advantaged retirement savings account that permits members to contribute after-tax dollars. You won't get a tax deduction like with a regular IRA, but your assets will grow tax-free and your withdrawals will be tax-free too. High-income earners should avoid Roth IRAs because they have severe income limits and contribution limitations. They do, however, provide tax-free growth and income during retirement, and no minimum distributions are required. RMDS. It would be best if you started a Roth IRA as soon as feasible to take advantage of compound interest, so make one now if you don't already have one. Number 10. Have a fully funded emergency fund. Every stage of life necessitates an emergency fund. Your emergency fund should now have enough money to last at least 6 months. Focus on it if it doesn't. If you lose your job or become ill and are unable to work, your emergency fund will help you. It's only a short-term solution to avoid adding emotional stress to your problems. In your 20s you may find it difficult to reach this aim, but in your 30s you have little time to waste. At least 3 to 6 times your current monthly salary should be set aside as an emergency fund. It's designed to assist you in dealing with unforeseen circumstances such as a job loss, a medical emergency, or a need to travel quickly, among other things. This fund is essential for your mental, physical and financial well-being because it protects you against life's unexpected twists and turns. Start with a recurring deposit and add to it every month if you haven't already. Your goal should be to increase your take-home salary to 3 times its current level. Continue to add to the fund until it reaches 6 times its original value. You'll be less stressed and able to focus on future decisions if you have 6 months' worth of costs set aside. Number 9. At least 10% of your income should be set aside for retirement. By the age of 40 you should be putting away 10% of your income in a retirement account. That may appear to be a large number, but it isn't. If you earn $75,000 per year or $625 per month, you save $7,500 every year. Make it a habit to include it in your budget and stick to it. Work your way up to 10% if you haven't reached it already to ease your way into higher donations in the future. Increase your contribution increments every 6 months or so. Number 8. Student loan repayment. Student loans account for $37,000 on average for graduates to make payments more manageable. Many graduates delay or opt for an income-based repayment plan. This only serves to delay what is inevitably going to happen. Rather, plan to pay off your debts before you're 40. Your loan will be paid off in 10 years using the usual repayment plan. Check to see if it's possible. If not, go as close as you can to it so you can repurpose those assets for retirement, home ownership, or simply enjoying life. Now, if you've been getting value from this video so far, pause the video right now, hit the like button, and go ahead and click subscribe if you're new. That way you'll be notified of all of our videos just like this one. Done. Great. Let's continue. Number 7. Buy life insurance. Life insurance costs rise dramatically by the time you reach the age of 40. Get your life insurance situation in order first. Your financial and familial responsibilities grow exponentially. You work tirelessly to provide a decent lifestyle for your family. In addition, you must protect them from death and disease. Most people require term life insurance. Consider your biggest outgoings and people you'd like to keep safe. Do you want your mortgage paid off for your children and grandchildren? Do you intend to provide funds for your children's college education? How about you and your partner? Do you want to make sure they have enough money to support you or themselves if you lose your job? Even if you pass away prematurely, a term insurance policy will keep your family financially afloat. Furthermore, health insurance is designed to assist you in dealing with rising medical costs, which make hospitalizations and critical sickness treatment more difficult. Furthermore, purchasing these insurance policies before the age of 40 allows you to obtain them at a lesser rate while you're still young. The cost of insurance is determined by your age and health. When the going is good, get your coverage. If you already have these policies, you should review your sum assured on a regular basis to make sure it still meets your current lifestyle and income requirements. The lower the premiums, the earlier you acquire life insurance. The rates are locked in for the period, so if you buy at 30, you'll have it until you're 60. Number 6. Invest in yourself. Investing in yourself is a lifelong endeavor, but one thing you should have mastered by the time you reach 40. You've probably spent the last 10 or 20 years concentrating on others or advancing in life. It's now time to concentrate solely on yourself. Learn something new, read a book, or simply relax. Consider your budget as well as your mind and body. You'll make better selections if you're better educated. The healthier you are, the fewer medical expenditures you'll have and the more life you'll be able to enjoy. Use this opportunity to acquire a new skill or look into side hustles. You never know what life will throw at you. But having numerous skill sets, passions and aspirations can help you deal with anything that comes your way. Number 5. Open a college savings plan. The average American parent has $18,000 saved for their child's college education, with children aged 13 to 17. Having $22,000 saved, despite the fact that tuition costs vary greatly from school to school, this sum would not be sufficient to fund a 4-year education without taking out any loans. Save for your children's education as soon as possible. If you have children, take advantage of tax benefits by opening a 529 college savings plan. This is where 30% of all college savings in the United States is stored. Do this only if you're well on your way to retiring, but wait if you're behind on your retirement savings. A college savings plan, on the other hand, sets your child up for a financially secure start in adulthood. If you fund your retirement plans early, and often the money in a 529 grows tax-free and can be used for vocational schools, books, dorms and other education-related expenses. Number 4. Retirement planning. In your 20s and 30s you usually don't think about retirement. As you enter your 40s, though, you can no longer afford to put it off. Long-term investing requires a lot of patience. The longer you put off making a long-term investment, the more difficult it will be to meet your objectives. Give yourself a good start in your 30s to avoid financial distress in your 40s and 50s. In order to calculate the amount of money you'll need for retirement in your 60s, you'll need to adjust the cost of your current lifestyle for inflation. By your 30s, you should have some money invested in long-term investments like PPF, EPF, NPS, equity, mutual funds, and so on. so that it continues to grow quickly in your later years and provides you with the financial security you'll need in retirement. You don't have much time to waste if you haven't already consulted a financial counselor to determine how and how much you should save. Number 3. Plan for your children's education. It's not cheap to pursue a degree in higher education. As a result, you must be prepared to meet the long-term financial demands of your children. As you enter your 40s, your children will be starting college and you'll be approaching retirement. You must find a means to match these difficult financial objectives with the borrowings required. To achieve them, SIPs and mutual funds are one of the most effective strategies to save for your children's education. Consider investing in assets that will appreciate in value, such as land. Aside from the aforementioned important goals, you should have developed a proper investment portfolio for yourself by the age of 40. Taking into account your investment capability, risk appetite, and financial objectives. A mix of debt and equity securities should be in your investment portfolio in your 40s. You should also think about paying down your debt faster so that you may invest and build wealth later. Making mistakes at this stage of your financial life isn't worth much, because the consequences of those mistakes will be amplified dramatically when you reach 60. Speak with an investment professional to help you overcome your financial challenges and draw out the ideal money management plan. Number 2. Invest in a filing cabinet. Throwing all your W-2s, pay stubs, and other financial paperwork into your garbage drawer might have worked as a filing strategy while you were in your 20s. However, it's likely that your finances have become more difficult as a result of this. You probably have more bills to pay, more insurance policies to manage, a mortgage to pay, and an increasingly complex tax credit system to comprehend. Organize some more, and if you haven't already, download a money management program to keep track of all your finances in one location. There are a plethora of options available online. Number 1. Draft a will. Nobody has any idea how long they'll live. Undivided property and riches among the heirs might result from a sudden death without a legal will, which might later turn unpleasant. It's highly recommended that if you have accumulated sufficient fixed assets and wealth, you should prepare a legal will with the assistance of a skilled lawyer, detailing the distribution of property and wealth among your heirs. It's also critical to ensure that your power of attorney is valid for a sufficient period of time. These financial goals to achieve before turning 40 are simple to incorporate into your life regardless of where you are right now. Take one step at a time if you're uncertain. If you work your way down the list, you'll finally hit the financial milestones that every one of us should have accomplished by the time we're 40. Well, thank you guys so much for watching today's video. I hope you've enjoyed and found value while watching it. If you did, go ahead and give it a thumbs up, and if you're new here, welcome and subscribe for more content like this. With that said, have a good day, and I'll see you all in the next one.